You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 2/18/2021. Well, we've got a lot of insane things going on in the markets, in the precious metals markets, cryptocurrency markets, copper, commodities. Everything seems to be going up. Is this the beginning of the end for the dollar? Or do they have a few more tricks up their sleeves? What do you think? Why don't you send us an email? Let us know your thoughts. KL@KerryLutz.com. That's the email address. Our good friend Rob Kirby is with us now. You find him at KirbyAnalytics.com. Rob, welcome back. And hey, what can you say about what's happening that no one else wants to say?
Well, I'm just going to start off by saying, nice to be with you again, fellow survivor.
Yeah, we both went through some heavy stuff, and we both survived. But you know what the best thing is, Rob? That we both, not only do we both survive, but that we're in better condition than before we went through our traumas.
Yeah, it's a hell of a way to get fit.
It's not how I would choose in the ideal world to get back to my fighting weight. That's for sure.
Hear, hear.
Yeah, but we're here to talk about it. So the creator, whomever he or she may be, obviously wasn't done with us yet. So we got more work to do, right?
Well, that's the way I view it. There's a reason why I'm still here. Yeah. And I just have to figure out exactly what it is.
Yeah, well, you know, it was weird. I mean, I got out of the hospital. My body felt like it had been shot out of a cannon for 2 weeks, you know, and my body was in like shock. And then after that, I just like bounced back right into my routine, better shape than I was before I went there, you know, weight loss, blood pressure, all that stuff. And again, hitting the gym, walking every day, doing those basic things that you kind of take for granted before something like this happens. And then you realize you've been given a second chance, a new lease on life, but it doesn't look like the dollar is going to get a new lease on life, does it?
Well, the way I view it, Kerry, the dollar has already used up probably 8, if not 9 of its lives already.
Yeah.
And, you know, the cliche saying is, what was it? It was Morris the cat who supposedly had 9 lives. Well, I think the dollar is pretty much out of lives, and it has spent them in a very reckless fashion, I do believe.
Yeah. Well, you know, when you got 9 lives, you're not worrying about the first 8 of them until you get to the last one. And then all of a sudden it becomes a big deal, right?
Hear, hear. You know, Kerry, when we speak about the demise of the dollar, what I find extremely, worthy of pointing out, we're in a cryptocurrency contagion, I'm going to say right now. It looks bubblicious to a lot of commentators, and to my eyes, all that cryptos are doing is exactly what precious metals have been consciously prevented from doing.
So you think we've got the beginnings of hyperinflation here?
I absolutely believe we are experiencing hyperinflation right now, but we are only experiencing it so far in cryptocurrencies and the equity market to some extent. And I expect this to intensify as we move along in the days, weeks, and months in the future.
All right. So also you might add to that equation real estate, because real estate is on fire in the States here.
And it is here too, in Canada. The only thing I will throw as a caveat on that, I think that the joy will not be maintained in the real estate arena simply because real estate is typically bought using borrowed money, as in mortgage and leverage. And my personal view is that as the economic conditions continue to worsen, because let's all just remember for a minute that we have basically got half of our economy in lockdown, with half of the people in our economy not working, and that has to have an impact on real estate at some point. Commercial real estate, I would like to point out, from where I sit, commercial real estate is already on its back and is in very, very dire straits. And my view is that residential real estate will suffer somewhat the same consequence as we move along, because to begin with, Carrie, incomes are not going up. And that comes as a byproduct of so many people being unemployed. So incomes are not rising. And I truly don't believe mortgage rates can go lower. So the firepower to propel residential real estate higher, in my books, it just does not exist. And my view is that banks will not continue to extend credit should real estate prices residentially move any higher. I believe that banks will, let's just say, tighten lending standards another few notches. So the eligible pool of buyers for ever inflated real estate, in my view, is dwindling, and it's growing smaller. And that, to me, is a foreshadow to probably a pretty severe correction in real estate. I do believe that the anti-dollar financial assets will continue to increase in value. I think the prospects for cryptocurrencies going forward are extremely bright right now. And that's because the powers that be are not allowing gold and silver to perform its historic function as a hedge against monetary abuse. And we see the long arm of the powers that be in the metals markets so incredibly in the last year, with physical metal being, we are going to have to rename physical metal, Carrie, in my view, to unobtainium.
Yeah.
Because, I'm close to people that are very, very big players in the bullion markets. And physical bullion, silver in particular, has become extremely scarce and extremely difficult to procure in any amount. And we've even encountered issues with gold as well as silver. But silver in particular, one person who I'm extremely well acquainted with happens to be the largest bullion dealer in Canada, is the largest dealer in the Royal Canadian Mint's dealer network. And he's been in business for over 30 years in the bullion business. And last year, he told me that for the first time in over 30 years, he could not procure 1,000-ounce silver bars when he wanted them. Could not buy any 1,000-ounce silver bars, period. They were unavailable. So the shortages in physical metal continue. And the reason cryptos, at least in my view, are going up is because metals are not being allowed to perform their historic function, but the money continues to be printed, and it's finding an outlet basically where it can, and that's in the cryptos. But my view is, and it requires much patience, but I do believe that physical metals, will ultimately be an exceptional place to have one's assets.
Oh, they'll wind up slingshotting up so hard and fast.
I absolutely believe that will occur.
Yeah.
And I believe that when the metals finally do move, it will be because the financial system has come apart literally at the seams. And the people that have been suppressing metals by selling unfathomable amounts of paper promises of metal will become physical buyers themselves out of self-preservation financially. So that's what I see coming. And the only question in my mind is how quick it happens.
When, yeah. And it looks like the pace is picking up steam for sure. Like, going back to real estate, I always posit the question. This applies to automobiles, college education, anything that requires borrowed funds that now the federal government of the United States and the world have interceded in. Not so much autos, loans, obviously, but to some extent, yes. How much would those things sell for if you had to pay cash for them? How much would a house be if you had to pay cash, or an auto, or an education? Really, it would be a fraction of the cost of what it is now, because credit is so easily obtainable. Really, if there's an opposite metal of unobtainium, then credit for those sectors really is what it is.
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, well, with unemployment where it currently is, and my perceptions as to where the employment situation will be in coming months does not give me a lot of belief that incomes will be rising anytime soon. And on the contrary, I do believe that the degree of unemployedness in our economy will lead to banks curtailing credit. And the other issue we also are confronting, Kerry, is, the 10-year bond is now over 1%. And while over 1% may not seem dramatic on an historical basis, let's just remember that in the first quarter of 2020, as the banking edifice in America added 40 some odd trillion in derivatives to their off-balance sheet positions in Q1 of 2020. That's when the 10-year bond fell in yield from 180 to 60 basis points. And that, to me, paints a picture of what derivatives are really all about. Therefore, managing markets. And because the vast majority of all derivatives in aggregate are interest rate derivatives, let's just say the trail of breadcrumbs is very pronounced that when yields are tumbling on the 10-year bond from 180 down to 60 basis points in one quarter, while banks are adding 40 trillion in derivatives to their off-balance sheet positions, that screams to me that interest rates were managed down. And because interest rate derivatives have this unique ability to make banks captive buyers of bonds. And that's exactly how they are employed. But the reverse can also be stated in that the derivatives positions of the banks in Q2 and Q3 of 2020, they've shrunk, giving back a lot of that 40 trillion in buildup And as the derivatives positions in banks have contracted, lo and behold, we've got the 10-year bond yield creeping back up. And I think we're now up around, what is it, 120 basis points roughly right now?
Right.
My view on that is if the 10-year bond continues to move, even at this point, even marginally higher, that is going to put the brakes on a continued robustness in residential real estate, without a doubt, in my view.
Yeah, it has to. It's
So-
all interest rate sensitive in the end, let's face it. Yeah.
Absolutely. So, I mean, I don't view the interest rate outlook, especially with inflation beginning to rear its head. My view is that interest rates going dramatically lower, the odds of that occurring, I think, are low. But I also, at the same point, I don't think they're necessarily going to be forced dramatically higher, because debt will be monetized by the powers that be to hold interest rates in check. But I just don't see this picture that we're painting. I just don't see it being supportive to ever increasing real estate prices. But I do see the current conditions highly supportive of increased crypto prices and ultimately metals, which have lagged huge. And I don't mind saying I have been a huge fan of anti-dollar trades, which I describe as the cryptos and the metals. And I've been well on record for a couple of years saying that cryptos would lead and metals would lag, simply because we have a regulatory regime that is vacant and have not been performing their job. The CFTC, the Commodities Futures Trading Commission, they do not enforce commodities law, which as written prevents the suppression of metals using infinite amounts of promises of metals in futures from being sold. But you see, we have metals basically spinning their wheels and they're stuck in the mud, and we get no price traction in metals at all, even while cryptos are going up gangbusters. And that is literally because regulators are not regulating.
That's the
and
truth.
Until regulators regulate, metals will remain moribund in nominal pricing.
Hey,
even though you can't find any in physical form.
Yeah. Yeah. Well, talk about regulators not regulating. I don't want to get into the whole Reddit silver squeeze and all that. But just as an example, under current law in the United States, you're not supposed to be allowed to naked short. And yet, how else can you explain how you could have 140% of the short interest out there? It just can't be on a stock if they were doing their job, right?
I share your sentiment 100%. That's called crime.
Yeah.
That's a criminal act. Shorting 140% of all of an equity is a crime, and it should be prosecuted as a crime. But unfortunately, in America, that is overlooked by regulators.
Yeah, well, Martin Armstrong was talking about that the Department of Justice is really the Department of Just Us. And it certainly appears to be such, because, you just can't have this. And now they're upset with the small traders, the Robinhood guys, because they've supposedly caused all of this. They brought it down on us, right? And, come on. It's kind of ridiculous, isn't it?
It's beyond ridiculous. It's the pot calling the kettle black.
Yeah.
Plain and simple.
Yeah. And that's where we're at now. So if you want to see more about it, you need to go over to kirbyanalytics.com. We always appreciate Rob's presence on the show and your perspective, Rob. Really brings a lot of sunlight to what the powers that be want to keep behind closed doors. The only question now, Rob's, really is how massive the collapse, and how do we get out from underneath it. And obviously, anti-dollar plays for sure. There's other things, but you need to have a plan at this point, Rob, because it's appearing more and more imminent, more and more likely by the day.
Couldn't agree with you more, Kerry.
All right. Well, we appreciate you coming on. Any questions or comments for Rob, just send us an email to kl@kerrylutz.com. We'll forward them off to him. And make sure you go sign up for your free newsletter. Got one coming out very shortly. financialsurvivalnetwork.com. Sign up there. Rob, always a complete pleasure. And stay healthy. We'll be talking to you again real soon.
Look forward to it, and you remain safe.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.